to the futures and the options market. So this is primarily with respect to the commodities market, right? So with respect to commodities, we have a widely popular futures market, a widely popular options market. So from the derivatives standpoint, there is a huge futures and options market existing for the commodities. Now, we know the definition of futures and options, so I'm not going to touch base upon those kind of definitions in this process. But what I would like to look at initially is what are the various risks? What are the various risks that are associated with the commodities business, which can very well be addressed by getting into the futures market. Now, if we typically see in a commodities business, there could be a lot of fluctuation in demand and supply. In the sense, probably let's say we talk about a particular crop which is more seasonal in nature. What we typically see is uh, the demand for that particular product could be there across the year, but when we look at the supply, because of the seasonal production, its supply could be only there in a few months in a year based on the crop season for that particular crop. But when we look at the demand, it might be there across the year. In some cases, let's say for winter related clothings or winter related equipments, the demand could be there only during a particular point in the year, particular quarter or 4 months in a year, whereas the supply of those kind of products could be there across the year. So typically when we are handling commodities, what we could see is there is a huge fluctuation in the demand and supply, and because of which there is a huge change in the prices also. And it may so happen that in case of let's say a forward transaction, there might be an agreement to buy something in future at a particular price, and because of the change in demand and supply, what